Tesla's inclusion in the S&P 500 delayed. So the folks at Seeking Alpha covered this piece, and it's written by Bill Mora. We've covered some of his pieces in the past, and they have it that the Tesla drops on S&P 500 snob. So this was written on the 8th of September 2020, and the summary is that shares not added to key market index. Multiple reasons speculated for non-addition. Time for battery day and Q3 production delivery news. And we're just going to come over here and says investors were hoping that Tesla will be added to the S&P 500 Index after its Q2 profit made it eligible for the index, but the committee did not include the EV maker this time around. There was a lot of buying in recent weeks, not only due to the split, but due to the possibility that the mutual funds and the ETFs like the SPDR S&P 500 Trust ETF would have to buy tens of billions of dollars worth of Tesla shares in the short term should the name be added to the index. With that not happening late last week, the bears continue to pounce. There are numerous theories out there as to why the committee did not add Tesla to the index. One reason may be that Tesla's profits were not considered good enough when taking out credit sales revenue, or that there was a belief that Tesla management pulled forward these credit sales into Q2 to engineer a profit to make the name eligible for the S&P 500 inclusion. Others point to the fact that the stock's market cap became so great recently that it would provide too much weight to the company's sector in the index. It's also just possible that the committee is waiting a quarter or two to make sure Tesla's trajectory is sustainable. After all, Facebook didn't get added to the index right away when it became eligible, so perhaps that's what's happening here. Okay, what are they saying here? That they were others point to the fact that the stock's market cap could become so great recently that it would provide too much weight to the company's sector in the index. Yes, that's a possibility. Yes, yeah. Okay, as we head into the final weeks in Q3, Tesla investors will start to think about the quarter's numbers. As the graph below shows, European deliveries are doing much better through 2 months than the heavily constrained Q2 period, although July-August figures are just down a bit from last year's Q3 period. Overall, Tesla should see a strong year-over-year total delivery rise thanks to the China Model 3 ramp up and the US Model Y ramp. Although current estimates aren't very high at the moment, either analysts are again setting another very low bar, or Tesla is going to need an incredible jump in Q4 deliveries to hit this yearly guidance. Okay, and I believe the author of this, Bill Mora, he was the one that pointed out something something about setting low bars in a previous piece. I believe he's the one that wrote it, but it was definitely written here on Seeking Alpha, and which is a possibility, which is obvious if you set a low bar and the outcomes are better than that. The estimates, which is what the bar is, then you will have sort of things that's been going on. We'll have you will cost the people with short interests to hurry and cover their positions, which which they wouldn't have any option to do, and um, you know, what they have to do that, and but that it really does not indicate. It's just some sort of manipulation, So it certainly will be interesting to see how Tesla shares trade over the next few weeks ahead of its battery day later this month. The stock finished Tuesday basically at a 50-day moving average. Shares have also gone above this key technical level for nearly 5 months, but if they fall through, which they did in Tuesdays after hours, where does support come in? Bulls are hopeful it is well before the longer term trend line many look at, because the 200-day moving average is currently around $180. So what should investors do now? Well, the stock is still above many key levels. Even after this decline and markets are on edge, I think there will be a little more weakness in Tesla in the short term as investors continue to digest the S&P 500 news. We still have 2 weeks until battery day, and it's also a little unnerving that the company has completed its entire $5 billion equity offering last week before the bad news dropped. Why did the company need to sell all that stock right away? Considering companies usually take many months or even quarters to complete other market equity sales programs like this. Getting that entire sales done in just 4 days entirely seems like a rush job. So at the same time, again, you can see if you add this section of this equity, this at the market equity sale with all the other things that has happened, which also include a belief that the credit sales into Q2, okay, the management pulled forward these credit sales into Q2 to engineer a profit. So when you combine all of these things, and with the inclusion of in the S&P 500 Index, you might even want to suspect that these guys, want to take advantage. It became an opportunity for them to raise more money. Remember, also, if you look at our previous videos, you will find out that we have talked about how Tesla keeps on raising money. How Tesla keeps raising money. This is really interesting. So one other thing to remember here is where things were. One other thing to remember here is where things were over the last few weeks. As the chart below shows, Tesla short interest was down about 75% over the past year, sitting at its lowest level in many years, with a much lower share price now after the split. It's a lot easier to short Tesla shares. So a decent return in short interest could add even more pressure to the stock. Okay, which is a possibility. Okay, let's quickly have a look and see the short interest of Tesla at the moment. Okay, short interest is 8.3%. It increased by 3% in just 1 day. Okay, yes, so there is no doubt that it's already happening. It is already happening. In the end, Tesla shares have slumped recently, and the lack of S&P 500 inclusion will help the bear case in the short term. Regardless of why the index committee did not add the stock, investors will likely have to wait another 3 months for another chance. Over the next month, there will be plenty on the company's plate, with battery day coming and the announcement of Q3 production and deliveries. Tesla shares closed right at the 50-day moving average on Tuesday, the 8th of September 2020, but after hours fell below that technical level. Could be sustained for some time if the short interest starts to rise again. Okay, but the after hours fall below that technical level could be sustained for some time if the short interest starts to rise again. Okay. Yes. Okay. So we'll see what people are saying here, and this guy says he's doing much better through 2 months than heavily constrained via Q2 2020 period. Although, okay, your Europe sales show dramatic declines versus last year, even recently after COVID effectless. Look for yourself for Norway, Netherlands, and Sweden. I have seen various stats that in countries like Norway and Netherlands, new brands like VW, all these other ones are decimating Tesla. Why do you say Europe down a bit? Europe looks to me like it's falling off a steep cliff. Between the pandemic and last year's Netherlands subsidy rush, Europe numbers aren't terrible. September is having its usual pickup too. As Tesla collapsed into another multi-billion dollar field boondoggle, I share with all of you full appreciation of the snob from the S&P 500 folks. When I look back to selling 5,000 shares of Amazon for $38.55 each, I realized exactly how smart I was. That Mox Fiddle can even preserve a marriage. It's not like the man in the moon. Okay, ZEV credits sold to other automakers to bolster the bottom line isn't exactly a sustainable business model. More like this is the reason Tesla got snubbed. Cap and trade anyone. Tesla's profitability comes largely from zero emission vehicle credits to automakers. 2 billion since 2010. Profit in the last 2 quarters came in large part from the credits. How many Robinhood investors knew this? I'd say zero. Okay, says how much? 2 quarters in last week. Okay, and in large part from these credits. Okay, and this guy responded, yeah, $2 billion so far. Another 3 billion will come in 2024. Pathetic incompetence legacy of funding Tesla to build more gigafactories. Direct your anger towards legacy author. Tell them not to buy credits from Tesla. Alternative facts. Tesla collected over 3 billion in regulatory credits since IPO. Tesla's greatest manufacturing feat is the job it does on its earnings report. The S&P 500 forbids any company to be part of the index whose survival and profitability entirely depends on the government subsidies and credits. As Lockheed Martin, as Lockheed is an S&P 500, that's patently false. Now tell us who needs Lockheed and who needs a defense contractor. Lockheed is basically a quasi-government company that actually produces goods for the military, which the government pays for. Tesla is a B2C company that gets a generous free government handout for being an EV company. Two totally different companies. One gets paid to manufacture products for Uncle Sam, while the other gets a free lunch from him. Governments across the world are incentivizing all electric car makers to make more electric cars, and they're either agnostic or on who builds them, or are set up to put Tesla at a competitive disadvantage. If you have problems with subsidies on EVs, go yell at the oppositions. The S&P does not play favorites or care about whether part of your taxes are from tax credit. They are tasked not to buy stocks that are extremely overvalued at 410, with a gigantic move up from a stock split and little news, and they are trading PE near 1,000. No one can say extreme valuations is not a possibility. Other reasons like the profits are from tax credits being an exclusion criteria could cause many companies in S&P 500 not to be there. And the small dip is over, still up close to 30% on the year. Should have bought the dip. Okay. Amazing how Musk sold all the shares before the S&P 500 snub announcement. I'm not sure it was a coincidence, and he knew nothing. Exactly what we pointed out. Tesla should see a strong year-over-year total delivery rise. Guesstimate remains around 490,000 total units for 2020, meaning 33% year-on-year growth. The next growth should occur when in late summer 2021, Tesla's growing heat factory in Brandenburg ramps up Model Y production. Thank you very much for watching this video. If you're new to this channel, don't fail to subscribe to our channel and hit that notification bell. Thank you.